Hi, it's Lee, and welcome to the Tesla Economist. There are a lot of people stating that Tesla is now losing market share. They then draw other several conclusions from this. I thought that we could analyse just how this market share is derived, go through some of the inferences that people are assuming through it, and discover what's really going on and how it actually may affect Tesla. I'm going to do this as best I can without just simply confirming my own bias, so we will try and look at the actual data we have. Now, a lot of this market share loss rhetoric has stemmed from a graph shown by Troy Teslike. Now, there are 4 graphs here representing Tesla's market share in the US, China, Europe, and combined. This is Tesla's market share of BEV vehicles too, so no clever Chinese marketing with new energy vehicles that basically include ICE. This is Tesla's real product, battery-propelled vehicles. So let's go through each of them. Starting with the US, we can see a decline of what was about 80% in Q4 drop all the way to low 60% market share in Q2. That's quite a big drop, the biggest drop being from Q1 to Q2. However, if we look at actual sales in the US over that time, Tesla went from 126,000 in Q1 to 136,000 in Q2. They actually increased their sales by 8% quarter over quarter in the US. So why would this mean they lose market share? Well, it's other EVs coming into the market, diluting Tesla's market share. We all know electric is the future, and even Legacy worked it out too. So they're trying to find a place in this market as well. Tesla can't and don't want to do things to suppress the competition. The opposite, if anything. That is out of their control. All Tesla can do is make as many cars as they can, but Fremont is fairly close to its capacity. There isn't much more room for ramping there, whereas the other several dozen auto brands are also trying to tap into this massive market too, even willing to push their vehicles into this market at a loss in order to establish some market share and brand recognition before it saturates. Tesla's production and sales are still increasing in the US. It's just some of their competitors are joining the market too, and Tesla has been pretty much standing still over the last year there, until of course the almighty Texas comes online and should double Tesla's US output sometime next year, and then another factory being built there too. Okay, it's hard to maintain about 80% market share, and it's a very high level. It's a race to market share, assuming the others don't go bankrupt. But Tesla will have about 5 million vehicles a year once Texas and this other new factory is ramped up. Just from those factories, we should expect 5 million a year by 2026. Although I think Tesla need to get a move on here and probably have another factory operational in the US by then too. I see no reason why they can't once this 4680 technique is refined. If the market share in the US is 15 million or so vehicles a year, then Tesla would have already secured 1/3 of that with this level of production. Of course, it is kind of hard to know how many of these vehicles may be robotaxis, and that Tesla pivots more to that side of the business, as it's even more lucrative than their already incredibly profitable EV business. But if Tesla are still making cars for consumers, then I would say that they wouldn't be far off a 50% market share in autos in 2026, and possibly when the US market is saturated, Tesla may end up with 40% market share. Although I think there is also the chance Tesla double down in the US due to this tax credit, so it would be really nice to know more about the future path of this company, particularly when it comes to their factories. Okay, sure, Tesla has lost some market share in the US BEV market, for lack of a better word, but over the same period, they've also gained some market share in the overall US market. I mean, if Tesla are producing and selling 136,000 vehicles in a quarter, that means the competition are around 73,000. Tesla are still selling just about twice all the competition combined. I mean, how is that not still good? If we look at Tesla's market share in the US for Q4, for comparison, when they were closer to 80%, well, that would mean that all the other auto manufacturers combined produced 36,000 units for the quarter. So what does this tell us? It means that since Q4 to Q2, the competition went from 36,000 units to 73,000 units. That is basically all that has happened here. Okay, you could use statistics and say that the competition have doubled their sales over a couple of quarters, but they aren't going to keep doubling them every 2 quarters. Their battery and cell factories take a really long time to come online, and all these US BEVs are using nickel-based cells, which are a lot more scarce. These legacy autos are having to partner with other battery manufacturers in order to make more cells. They are having to build massive factories in order to achieve this that take years. Then after all that effort, they still haven't caught up to Tesla's 5-year-old Model 3 in cost, range, performance, or features. A lot of the narrative for Tesla losing market share is based on Tesla's demand dropping. Tesla have fulfilled the backlog and there are no new sales coming to grow the business. But if you check the wait times for Tesla in the US, then back in March this year, there were wait times until September for Model Y long range. That's 6 months. And this is when the price was $60,000. The price has now risen to $66,000, and the wait time is now December to April, 2 to 6 months. That is quite the discrepancy there between wait times, but this is a massive price increase, 10%, which means there are a lot few buyers able to afford that price point. And okay, that potential 2-month wait time may not look as good as the previous 6-month wait time at the old price, but I think you'll find by the time January comes around, we're up to at least a 6-month wait time again once that tax credit comes in. In fact, what is interesting is that even when there was this price rise to $66,000 back in June, before there was any announcement of a tax credit, the waiting list was January to April. That was a 7 to 10 month wait, and even longer when the price was lower. Sure, the economy may not be as hot as it was back then, but to drop from a 7 to 10 month waiting list to 2 to 6 months seems coincidental as soon as everyone suddenly realizes they can save $7,500 if they just wait to order in January. Except what's going to happen then? The price is lower, so demand increases a lot. Then all this pent-up demand from people who didn't want to order as they wanted to wait for the tax credit. Well, if it was 7 to 10 months wait at a $66,000 price, what will the wait time be at $58,500? It could be up to a year. Also, psychologically, consumers feel like they're getting a better price buying a $66,000 car at $58,500 compared to buying the Model Y at $56,000 paying full price. It's the same car, but it feels like you're getting a much better discount with the tax credit, even though you're actually paying more for it. Therefore, I would not at all judge Tesla's demand by their current market share. And also, I wouldn't worry about Tesla's market share in the US, as, like I always say, it comes down to the 4680 cell. And as soon as that hits high volume production, then all the work that Tesla have been doing on growing in their sales in the US over the last 2 years will finally come into fruition. Right, so bear that in mind. Tesla have been working really hard in building up their sales in the US and spending about 2 years on getting this new factory sorted, and still, so far, it has made a negligible difference in production. But when it finally kicks in, then we will certainly notice it. Okay, I wanted to go over the market share in China and Europe too and explain them, but I don't want to just gloss over it. It needs some thorough analysis, so I will do that in the next video. Thanks for listening. Please hit the thumbs up and subscribe. You can follow me on Twitter and talk to me on Patreon.